Should the markets give up on phase 2 and beyond? And is it just phase 1 that they need to price in?
Well, I think the market is glad to see phase 1 deal done. After all, there has been quite a few zigzags during the course. I think for the next phase, I think people are not having a sort of a solid expectation of what to expect in phase 2. But anything could happen. Tariff can go up or down. The targeted list can be widened, etc., etc. So it's very difficult to say. But what can be said is that since the trade war, the U.S. trade surplus structure trade deficit structure has changed. It used to be that U.S. has a very large trade deficit against China, but now the deficit has been switched to the other nations, especially the Southeast Asian countries.
You absolutely hit the nail on the head, Hao, because that was going to be my follow-up question. Does this iron out and streamline the supply chains which were choked over the course of the last 18 months or beyond because of those trade tensions? So you not just look at some of the key China players finding favor in the US, but also Taiwan, which is going into elections, and the semiconductor industry that it derives so much of its revenue from will also get a facelift. In fact, semiconductor industry, which has been core to this issue, will be the big gainer out of the stability in trade tensions there.
Yeah, I would say that the structure hasn't, the new trade deal probably won't solve the trade deficit issue for the U.S. Now, basically, during the course of the past 2 years, some companies have been trying to relocate their supply chain out of China. But then, once you go push into Southeast Asian countries, you run into cost issues, and also you run into infrastructure issues. Many of the countries may not have they already built up roads and bridges to ship your goods out. So it's very tricky. So after all, China has done this for years at a very low cost. So what happened is that the overall trade level globally, not just between U.S. and China and U.S. and the Asian region, the overall trade level actually comes down. So I think that still remains as a formidable headwind for global economy.
And Hao Hong, I mean, given that the tariffs are still in place, some considerable tariffs, even though the phase 1 deal removes the threat of additional tariffs and pares back some of the existing, I mean, how painful will this continue to be on China's economy in the absence of a phase 2 deal that further pares back tariffs?
Yeah, I've seen estimates showing that, if the trade war continues, it will drag down Chinese GDP by 1.5% to 2%, which is quite significant. After all, China's GDP growth has slowed down substantially. So if you take 2% out of that, it's a very substantial slowdown. And also, for the Chinese government, it's important, to keep the employment level up. So I think a slower economy probably won't help to achieve that target. So I would say that it is still putting pressure on the Chinese economy, but then at the same time, what the market is seeing, the reason why the market is improving is because the market probably thinks that for the time being, things couldn't get any worse from here. So I think on the margin, there are improvements, and therefore the market is actually improving.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.